Afternoon. How are you all doing? Afternoon, Steve, Roswitha, Dina, Kennelly, Danny, Callum, Mark, Thought, Feeder. Afternoon all. Could be a big one this afternoon. Or hope so. Afternoon, Dirch, Fletch, XR, update, not news. Alex, how are we doing? So CPI today, big one. Hopefully the big one anyway. So the US dollar's had a bit of a kick, or rather the yen, or the US dollar. I mean, the US dollar's dropping a little bit, but these all the yen pairs are starting to move. Whether this is the start of a turnaround or not, we will have to wait and see, but it's certainly all powering up a little bit. I wouldn't necessarily trust this move ahead of the CPI numbers. Because we don't know what's going to happen with CPI, or indeed what effect it's going to have on the yen moving forward. But we are certainly back up where the intervention started, and this looks like where the market is reselling from on a lot of these pairs. So, we're approaching. This is the second intervention move on the CAD. It's the first intervention move on the Aussie. It's kind of between the two on the Swiss Euro. It's up bang on that intervention move. So, this could be the start of the next leg down. We will see. So, a good opportunity for shorting on the yens. We had a look at all these yesterday on the RSIs. All the yen pairs extended on the 4 hour. Few hourlies we had yesterday as well. So if you did get into these, you should be in profit on them. But difficult to know, really. We'll have to wait and see. So today we've got, we had the Aussie wage price index this morning. Didn't really do a lot, but obviously 130 is what we're here for, which is the CPI numbers. So CPI is forecast annually to have dropped by 0.1, month on month to stay the same. The core number to have dropped, which was indicative of what would happen year on year. So if we get the forecast, it could be weak for the US, but if we get obviously a lot lower than forecast, it will be weak US. If we got a lot higher, i.e. we get the bounce and the inflation figure does not come down again, we may well see a rally in that US, but it's going to be a very difficult one to call today because the market is waiting for any opportunity to hit the button on dropping rates. So we're sitting at 3.5. We bounced last time. They're forecasting that this won't bounce this time. We'll see what happens. If you look at yesterday, we had Powell talking yesterday afternoon. Inflation in quarter one was notable of the lack of further progress. We're not touching interest rates because it's not coming down. We expect continued growth, which is fine. Doesn't affect interest rates. We expect the labour market to continue to rebalance. Doesn't really affect the interest rates. My confidence in inflation moving back down is lower than it was. Don't want to touch the interest rates. Then we had restrictive policy may take longer than expected. Don't want to touch the interest rates. Not, however, came out from the ECB and said we're probably going to do June, which we know. And then Powell said, I don't think it's likely the next move would be a rate hike either, which we kind of know, but that's months and months and months and months and months away. So I wouldn't really necessarily pay a lot of attention to that. This morning, then we had Powell saying it will take longer than expected to get inflation down. Overnight news-wise, we had Mester coming out overnight saying, I'm not eager to consider interest rate hikes. So basically they're saying, we don't think we're going to need to put it up, but it's not coming down. So we're definitely not dropping it. So we know this. What we're looking for today is, when are you going to do it? That's the important part that we need to know. Bill Roy's just come out this afternoon, or rather this morning, and said they'll likely cut rates in June, again backing up what was said yesterday. And that was about it, really. Oil demand is going up, weirdly, which would put the price of oil up. So we'll see. if the confidence in inflation is approaching target, we'll have a blah, blah, blah reduced rates. So this is just the ECB just continuously saying June is when our rate cut is going to come. Cuts after June will be decided each meeting, obvious. But that's about it. So it looks to me as if today we may well get a little bit of a bounce on inflation. So we'll have to see what happens there. But when that news comes out, 7 minutes, obviously we'll get a massive spike. That spike isn't necessarily the direction it's going to move in. You need to pay attention to what it does after the spike. As we saw yesterday with the PPI figures, they had a big spike and then it retraced the whole lot, turned around and flipped the other way and hit ADR. So don't take the initial spike as the direction it's going to go in. We've also got retail sales, which will skew the figures a little bit this afternoon as well. So we'll watch that. Today so far, no movement. Nothing's hit ADR. Yeah, so as you would expect, the market not particularly excited today. Not really interested in moving ahead of CPI because obviously any movement you put in ahead of CPI could well just be completely wrong. So we don't tend to get an awful lot of movement. The only thing moving, as I say, is the yen. So if you look at everything else, we've had a bit of a push up, pulled back to where we started, pushed up, back to where we started. Aussie New Zealand's pushing down a bit. But yeah, not a lot else really going mad today. Nothing's hit ADR as yet. So first entry taken on the pound. Oh, itchy nose. I'm sure it's this microphone. I sit here all day and I don't get an itchy nose. As soon as I put this thing in front of my face, I get an itchy nose. Might wash the thing. I don't know whether it's got powder in it or something. Powder? Not powder. What am I trying to say? Dust. So yeah, nothing really to look at there. It is Wednesday. We've had nothing hit weekly ranges yet either, which I'm not surprised about because obviously the market's waiting to see what happens with CPI before it makes any decisions on movement. And nothing has hit its monthly range apart from those two yens, which is Aussie and New Zealand. So nothing exciting to look at on the ADRs. RSIs today, the only thing that's got really any extension on the hourly is the New Zealand dollar, US dollar. I've already got short on this. So that has just got extended again up there. Obviously, there's no point in doing anything with this because in the next 10 minutes, you're going to be ADR up or ADR down. What kind of powder? Certainly not any kind of powder that would make life interesting. Dust. I remember the first time I discovered what dust was. I was like, ew, disgusting. If you don't know, look it up. Morning from Germany. Morning, Alex. Morning, Johan, Amy. ExoUpdate.news. Powell lied. Probably. Afternoon, Neo. David. Virginia, it's time. Crum. Morning, YV. Right, so afternoon even. So we've got 5 minutes to go until the news. The only other ADR extensions we've got at the moment are the 4 hours. So Aussie dollar Swiss was extended on the 4 hour. Beautiful double top at resistance. So that's coming down. This thing hasn't gone anywhere for 2 weeks now. We're in week 3, basically. Not moving at all. Euro US dollar is extended, but as I said, anything you get into today, it's just basically ahead of the news. It could go either direction. So I've just got another position on that this week, or first position really, because I got out the first one there. So hopefully we get a bit of a rally on the US, but we'll wait and see. Pound US also extended on the 4 hour. So another extension there. That's a nice resistance we're coming up to as well from 2 weeks ago. But again, you know, we're still range bound on this thing. Could go anywhere. I get the feeling whatever move we get today is likely to get undone unless it's really far out. The only reason I think that US dollar will really collapse today is if we get a massive negative number on CPI, and CPI undoes all of this positive that we had. So we're looking for a substantial miss on the CPI number, i.e. annually coming out at something like 3.1, monthly coming out at 0 or something like that. So I don't think we're going to get that, but we'll see. Other extensions, you got New Zealand dollar Swiss on the 4. There's 3 bar reversal going on that. Beautiful short opportunity. So good pullback opportunity. Watch that level there on the US dollar. New Zealand dollar Swiss. So that's a 70 RSI extension, and obviously New Zealand dollar yen and New Zealand dollar US dollar. But again, wait on that. I've got one on already. Didn't quite get to my second entry, unfortunately, which would have been nice ahead of the news, but it missed me. So we'll see where we go on that. But yeah, so nothing much to talk about really until this news comes out. US dollar, bullish or bearish? I don't know. Why are you asking me? Numbers haven't come out yet. I'll tell you in 2 minutes. You're acting as if I have a time machine or something and know what the future holds. Afternoon, champagne puppy. So we'll watch Euro US. What have I got trades on? Euro US, haven't I? So we'll watch Euro US and see where that goes. We've got 1 minute 30. So I was planning to have a little bit of a rundown of all the pairs this afternoon, but I don't think I'm going to bother, to be honest, because pretty much everything will probably move this afternoon in a minute. And until we know what is going to happen with that in the next sort of couple of hours, it's a little bit difficult to sort of forecast anything at the moment, but we'll see where we go. I'll have a look. If there's any pairs in specifically you want to have a look at, let me know. But what I'll probably do is tomorrow morning, I'll probably do a full analysis because I'm on tomorrow morning. We'll be looking at the unemployment rate for the Aussie. And then we've got unemployment claims in the afternoon, which won't do an awful lot. So I'll probably do a full rundown of all the pairs tomorrow morning, once the news has settled a little bit. Right, 30 seconds to go. You may have leaked data. You may have the leaked data. That would be nice. Nas? No idea. Market's not open for another hour. And I wouldn't trade the NASDAQ this afternoon, because this NASDAQ would have done all its liquidity by the opening bell. Here comes the spread. 6 seconds. Okay, negative US. Looks like the numbers are red. ADR's just gone off, as you can see, across the board. On all the yen pairs as well. No, it hasn't. Just gone off on loads of stuff. Everything will move on this. Okay, so that's negative US. So miss on the numbers. How far? So we've got 3.4 on the annual as forecast. So it's a 0.1% miss on month. So not enough. 0.3 as forecast. Retail came out as forecast. Month on month retail came out as a miss. But it's the core retail that we want to watch. So ever so slightly bearish on the US month on month. We were forecasting to stay the same. We dropped 0.1%. So it's a 0.1% deviation, which is nothing. So this will be a little bit bearish for the US initially. But good mean reversion opportunities. I don't think this will hold. So if you want to try and trade the news... Oh my God, what is going on? Does my voice sound a lot different without this thing on? I don't know whether this actually makes a lot of difference, but sure, that's what's making me sniff. Pound US 125, New Zealand CAD 125. So if you want to trade this, wait for this initial spike, wait for this 5-minute candle to be over, and then you can start to look for signs of retracement. Chances are we will just be back down here within the next hour. No difference. Sounds the same. Yeah, right. Get rid of that thing. I'm assuming that it is that's causing it. I only sniff literally when I do the stream. I sit here all day and I don't do it. So it's got to be that thing, because that thing's not normally in front of my face while I'm sitting at my desk. Helps with the pops. There you go. That probably would have sounded different. My heart really starts going before these CPIs. I know. Exciting, isn't it? But it's not. No, it's a non-event. Don't forget, the market has already priced these numbers into the market. So we've got these numbers priced in. So this is why deviations happen and spikes happen when we get numbers which we weren't expecting, because the market has to reposition itself because it's got it wrong. That's not enough. A 0.1 differential is not enough to make a massive move happen. It needs to be a lot bigger than that. So you can watch this for short. So I'll be getting another short on this once this 5-minute candle's over. So ADRs, obviously, let's look what the yen's done. Yeah, big strong move on the yen. So yeah, yen's starting to sell off again. We've got an ADR hit on US dollar yen. New Zealand dollar yen is rallying. Pound yen is dropping. Euro yen trying to. This is a no news event, this one. Pound US, we got 125 ADR. Pound New Zealand dropping. Pound Swiss completely undone. Pound CAD just taps up into that resistance look. So that's your 2-week high. And last week's high. To come back down into here, into that propulsion. Out of euro pound shorts. So 0.5% banked on that. Got out of those before the news. That was the target. That high. Bounced straight off. Dead duck by the looks of things. There's nothing really going mad. We're up at monthly highs on Aussie US. We've got double monthly top. So this is a very nice area of resistance. So we hit that level, tested. We've just tested it, or we are testing it now. So this is the first test of the 2-month high. So if that fails, find ourselves back down here, I should imagine, because we'll come back into the range if that price discovery move fails. Aussie Swiss is up at the weekly highs as well, again, but we're totally stuck on this thing. Look. So good looking short opportunity there, but 175 ADR to the downside is really all I would expect to get out of it. Might come back down and retest that in the next week. Still can't get going. This market just cannot find any news event to give it any traction whatsoever. It's just dead in the water again, still. I think hopefully next month, we'll get some movement from the euro, and the euro hopefully will start to kickstart some moves when that June interest rate drops come on the euro, which isn't far away. That will hopefully start to make things start to trend again, get some market structure back in the market, because at the moment we're just stuck in ranges all the time. Literally news stuck, and that news has done very little, a lot less than I was expecting. So that could be your higher day gone in there. I would leave it, if you give it this 5-minute candle, if you fancy a quick scalp opportunity, wait for this 5-minute candle to go in the next 2 minutes, and then watch wherever the range high and low of that is, and potentially just take a quick scalp back down into there. Or you could assume that we're going to rally, and then just retest that higher. But doesn't look to me like there's enough volume in the market to move this today. Again, voice is the same. I hear more noises when you speak. More air noise. Might be my fan. It's not my fan. My fan's on the PC. PC's going nuts because I've been doing tons of back testing today. So I might just give it a wash anyway and put it back on, see if that helps. And if I keep sneezing, I'll basically just have to rip all my nose hair out, I guess. Don't need it, do we? Now there's a thought. Not doing a lot at all at the moment. Yeah, pound US is almost back to the origin of the move. Look, so we got 125 ADR. We're just coming back to retest the high of the pre-news. So there's a propulsion gap going to form here at the moment in the next 30 seconds. So that will be your kind of area that if they are going to move off today, this is where they will move off from. But doesn't look to me like they're going to. Dead in it. Dead in the water. Is it possible to make the market reversal as multi-currency EA? No. You could do. I mean, yeah, I'm sure you probably could somehow, but not on MT4. You could do it on MT5. There's no need to. Just open 28 charts or however many charts you want. Just stick it on there. It takes 2 seconds. People are always looking for stuff to overcomplicate something very simple. Open a chart, place the EA on, open another chart, place the EA on, do that X number of times. That's it. Yeah, you do it once in your life and you leave it. You never touch it. It takes 2 minutes, 5 minutes to set it up. Or I could spend the next 2 months coding something overcomplicated and engineered to put onto one chart for you, or not. Really don't need it. It's too complex. This is why I built the Position Trader EA. The Market Reversal Alerts EA is incredibly complex. And to do anything to that is incredibly complex. It's got way too many moving parts, fortunately, because that's what everybody wanted. And nobody uses any of it. Everybody uses what I use. RSI or ADR, reversal alert. That's it. Distance to scale in, target to get out. That's all you need. You don't need all the other, everything else in it is just overcomplicated, random crap. I just wish I hadn't have put it all in there. But which is why the Position Trader is so good, because I've just done testing on all majors, excluding yens, yeah, over 4 years on the hourly time frame. I've just done all this testing, thousands and thousands and thousands of tests this morning, thousands. If you did this with the market reverse alerts, yeah, you'd still be on the first test, and you'd probably be 2 years into the first test after 2 or 3 hours, if you're lucky. Position Trader EA, all 28 pairs, nailed in the morning. It hasn't got 10,000 lines of useless code in it you don't need. Okay, so there's a nice, you pull back there. So if you wanted to take a range break today, that's 10 minutes into the news. So if they're going to rally it, break that high. If they're not going to rally it, we'll be back down to origin. So there is an opportunity. That's the best way to trade the news, is wait for the news to happen, wait for the market to reset itself. Euro US is trying to go long look. There's your propulsion gap on the Euro US. But not really any momentum, is there? Rubbish. Has anybody got any pairs specifically they want to have a look at? So I've just seen what out of the FTSE. I did a FTSE hedge this morning, out in profit, still in the DAX. So I've taken a 2-hour target on that, which is the high. So just taken profit at the highs on the DAX, looking for that to pull back down and just get out down there somewhere. Pretty much 100% strike rate on all indices for this month. Up 9.78% on the stock index hedge this month. We're on the 15th of the month, so we're on for a 20% month this month if it carries on like this. Absolutely killing it, SIH this month. Markets are back. Fingers crossed. Afternoon, Johannes. FTNet, New Zealand dollar, US dollar. I've got short on this from, I think it was last Wednesday. Where are we? Wednesday, Tuesday, Monday, Friday, Thursday. Last Thursday, H1M5 mean reversion entry. Was looking for some kind of rejection at those highs. We didn't get it. We've just filled the propulsion gap at last month's high. So this area here basically is potentially a monthly high rejection. And we have this little area coming up here as well, which is around about 150. It's pretty much where it is actually, isn't it? Pretty much where we hit today, look. Not shy, it's a bit shy, but about 150, 175 ADR is these highs. So there's a potential rejection there, but looking for it to pull back into this area. So at the moment, I've got one on from there. Second entry will be going in shortly. So second entry will be going in when we close inside that propulsion gap. That'll be my second entry. And then I'll be looking to get out down at the lows, I think. So currently targeting these lows here. Once the second entry goes in, I will probably move my target down to there, up to there rather. There's a propulsion move there, which didn't quite break that high, so I wouldn't really class that as a good target, but depends where my average goes, where I get in. So assuming I get in somewhere around there, average will jump up to somewhere around there. So that might be a decent target, that high. All depends what they do with this US dollar, whether they decide to continue to rally it or not. Not really doing a lot, is it? So just a quick update on the RSI2 strategy with the position trader EA. I've got it running and it's taken quite a few trades, which is good. it'll probably take quite a few more today, actually, because I would imagine we've got some more RSI 2s on the daily will go in at the end of the day, if it continues to rally, that is. But I've been doing those tests that I started yesterday. I've finished them all off this morning. And virtually everything, every variation of every pair, most of them are 100% profitable. Running on the hourly time frame, so this is looking pretty good. So the Swiss franc pairs don't do particularly well. So US dollar Swiss only passed 36 tests. New Zealand dollar Swiss passed them all pretty much. Pound Swiss passed them all pretty much. Euro Swiss only passed half, and CAD Swiss passed them all pretty much. And Aussie Swiss passed them all pretty much. So the Swiss franc, half the pairs worked, half of them didn't. So they probably cancel each other out, to be honest. So I'm just going to go through this afternoon, and I'm going to look for a consistent setting that works across all pairs. And I think that's what I'm going to adjust to. And then I'm going to run tests on the 15-minute time frame to see if there's an advantage on dropping time frame, because my analysis shows that there's a massive advantage dropping time frame in profitability, but drawdown jumps dramatically as well. So I need to put all of these into a portfolio. Then I need to run that, put all those into a portfolio, and just see what the drawdown's like. But overall, strategy looks pretty rock solid, although high risk, obviously. Yeah, so I've done all that today, and basically it's just scaling in at 0.1 intervals with a 1.2 multiplier, and it doesn't matter what stop loss you use or what target you use, it just makes money. So it's a really nice, robust strategy, but it will take drawdown because it uses a stop loss. Nothing much you can do about that. It is going to get stopped out because that's what it does. That's what stops do. I'm going to have to take my precious comment back. There does seem to be a fairly significant difference without the mic thing. Oh, is there? There you go. Is that better? Look, immediately want to sneeze. There you go. He's got his little afro haircut on again. Yeah, I'll just give it a wash. Right. It is better. Yeah, okay. I'll have to play it back. What have I got in the mic? It's just dead skin. It's horrible. It's dust, basically. But obviously, I'm breathing in with this in front of my face. Trouble is, if I put it down here, it gets more echoey. Well, it did when I did my tests. So I could stick it in all sorts of places. But it's obviously going to affect the sound quality. So for me, the trouble is, because my office is pretty much a box, and I've got a 42-inch monitor in front of me and two 28-inch monitors either side, I've basically created a wall in front of me in a box. So when I talk, basically my voice just bounces straight off of everything and straight into the microphone. So if I don't have it really close and have the gain turned down, it just echoes like crazy in here. There's nothing I can do about it. But unfortunately, it means I need it in front of my face. Check out the Lewitt Ray microphone. It has sound deadening and proximity calibration. So does this one. This microphone is £180. It's pretty high end. It's got about 1 billion settings, which I have fine-tuned. It's not a cheap mic at all. So, yeah. It's got all sorts of stuff built into it. Yeah, a nice wash will fill the sniffles, hopefully. For the RSI2 strategy, it looks like 5-minute has a lot more trades than 15 and 1 hour. Yeah, it will do. Which partly explains the higher profit. Yeah. The RSI is over 90 all the time in the day, isn't it? So if you think about it, we got 500 trades on the hourly, 1,700 trades on the 5-minute, and 1,100 trades on the 15-minute. That's because the daily RSI2 is taken from the current reading. So even if price pushes down, RSI2 will still be extended above the level. So it doesn't really affect initial entry. However, it will affect massively multiple entries. Yeah. So if you think about it, what happens is we take our first entry on the hourly time frame when price pushes down below a moving average. Yeah. If price then pushes up above the moving average and down and does this, won't take any extra trades. On the 5-minute time frame, though, it will cross that moving average 100 times more. Yeah. So you get an awful lot more entries, and they're 0.1 ADR apart. So what happens is when those RSI2s work, they really work. Yeah, you get a big target hit a lot quicker. When they work quickly, you still hit the target. When they don't work, you don't get into loads of trades. So what it's doing is basically it's building a position on RSI2, and the ones that work, it makes a killing on. The ones that don't work, it doesn't take trades at 0.1 apart. If it takes a trade and then market pushes and pushes and pushes and does that, the second entry might be half an ADR apart. Yeah. So the way that this makes more profit is by when RSI2 extends, i.e. you get 2 or 3 or 4 up days on a row, and then it accumulates and drops. Those accumulations, you can build up 5 or 6 positions in. When it drops, you've got 5 or 6 positions on. That's why it's making so much. It's basically like adding to winners sort of thing, but we don't. We add to losers. But we're also scaling out. So that's why the profitability is so much higher. But the drawdown doubles. But the profitability, as I say, is 4 to 5 times bigger. So you've got 2 settings. Do I want to be conservative and take small drawdown, or do I want to be aggressive and take big drawdown? Yeah, aggressive makes more money. Conservative makes less money. So you get a choice, don't you? Are you the type of trader that really hates having drawdown? Use the hourly. Are you the kind of trader that doesn't give a monkeys about drawdown? You want to buy a Lamborghini? Use the 5-minute. Yeah, but don't cry when it goes into 40% drawdown, which it might well do on your account. So, but you know, this is a job that involves risk. Yeah, that's how we make money. The more risk you take, the more money you make. Very simple. 3 monitors. What are you, a trading guru? Yeah, but I don't use any of them for charts. That one has news and stuff. That one has social media. This one has charts. I just hate flicking between stuff. Can't be bothered. Buy more monitors. Much easier. I used to have 6. My old trading setup was 6 monitors. And I used to have charts everywhere in the olden days. I don't know if I've got the picture of it, but probably not. It might be miscellaneous files. Yeah, here you go. This is my old trading setup. Yeah, this is how I used to have everything set up. So I had all my P&Ls up here. I had European pairs, Aussie, New Zealand, Australasian pairs, yens over there. That was where I did all my main analysis, and that was all the majors. Yeah. And I was like, look at me. And then I had my social media on my laptop and stuff. So that's how I used to be set up, and a couple of bullet holes in the wall. Aren't there anymore? That was where a monitor stand was. But The problem with this is you look at it all and you go, wow, that's brilliant. What do you do with it? You can look at it as much as you like, but until you get a signal, you don't do anything. So yes, it's lovely to see what the market's doing, but the only thing I'm interested in is this. You only need one monitor to watch this. Have we got one of those? No. All right. I'll wait until there is. You sit here and you literally wait for that to go red. That's it. That's your job. If that doesn't go red, you don't do anything. So there's no point in having it all. You know, I said after I'd had that set up and I got rid of it, I was like, how many sets of eyes have you got? One. How many charts can you look at once? One. How many monitors do you need? One. You got 6 monitors with 28 charts on it. You're only looking at one at a time. It doesn't help you in any way, shape, or form. All these people you see with all these monitors with charts everywhere, utterly useless. You can't use it. None of this data, all this is loads of data coming in for my brain to go, what the hell do I do with this information? Useless. This is why I got rid of all this. Yeah, and I built the dashboards, because the dashboards replace all of this. Don't need any of it. All a load of rubbish. And before that, I had 5 monitors. I actually added another one. I used to have 5. And I thought, that's not enough. I need another one. So I did a 6th. Mental. Absolutely no point in any of it. Yeah, I haven't got that anymore. Move the mic to the side so it's not under your nose. I can do that, all right? So what does that sound like now? Now the microphone isn't in front of my face. Does that sound better or worse? Am I too quiet? Because I found when the mic wasn't in front of my face, it just didn't work. Lambo crew broke into your office overnight and put little feathers in the mic to screw your stream. Quite possibly. Aussie dollar CAD. I don't even know if you can hear me. No, it's too quiet. Yeah, see? And it echoes because I've got a massive echo chamber I'm sitting in. Aussie dollar CAD. Weekly high hit. 2-week go high. No, it's last week's high, isn't it? So we just hit last week's high at the moment. Obviously, Canadian dollar will be moving with the US at the moment. So the US and the CAD move together. Obviously, the CAD won't move to the same extent that the US will, but it will move in the same direction. Day 8. Higher the range. Nice short opportunity to go down there. Drop down M5. Wait for a reversal. You're not even going to get a reversal. Look, it's just pitiful. You can't even get into the market. It's just useless. They're not going anywhere. Some more RSIs extended now. We'll have a look at those. Just not going anywhere. So you got a few more RSIs extended now. Euro US dollar. H1 approaching the 80 level now. We're up at above 75. New Zealand dollar, US dollar, the same, obviously, because the US dollar is weakening. So that's extended. Good opportunity for a short. Again, you're not going to get a reversal alert on these because the move is too big. But if you're going to take an MA cross, position trader EA will get you in. It will get me into a second position any minute now on the close of this candle if it's bearish. US dollar yen extended hourly to the downside. I'm not trading the yen at the moment, but I'm kind of been waiting for this to start. I mean, this is what I was looking to happen before I get into a short, and I just don't want to jump into a short. This has taken way too long, way longer than I was expecting it to. This grind, I was expecting more of that sort of movement. We haven't had it. I really don't know if this is going up or down from here, so I'm not interested in getting involved. But it is extended to the downside. However, if we are expecting this move to continue, you shouldn't be going long on it. You should be going short. If we don't know, everything else is just normal extensions. I would like to know currently how many pairs position, how many Pairs position open in position trader EA. I don't know. Depends on what you're trading and how much drawdown. I don't know. Depends what you're trading. I can't answer the question as to how much trades you've got on or how much drawdown you're in. What I'm in is irrelevant to you because you will have different trades. Nowadays, you have to be trading using Apple Vision Pro to be profitable. Quite possibly. I did VR trading as well. I used my VR headset. Pointless. It's exactly the same as sitting in my office looking at charts. I nearly bought 6 monitors and a new computer before finding me. Yeah. Trader flex. That's exactly what it is. You don't look. If I sat in front of one monitor, if I sat in front of a laptop and went like that and did one of those adverts they do on those crappy websites that sell signals and courses, everyone would look at me and go, he's only got one monitor. He's not a trader. That guy's got 6. He knows what he's doing. He's looking at everything. He knows what's going on everywhere in the market. That's the assumption, isn't it? More information, more power. More information, confusion, analysis, paralysis. That's what you get. Yeah, quieter and echoey. Yes, it's not good. I'll keep it here. That odd is stronger, thank God, the last few weeks. Well, it's the last 10 days, 8 days, it's not doing anything. So we've had 2 propulsion moves on it. And it did do obviously a little bit of grind there, but I don't see any reason for the Australian dollar to be strong at the moment. It's trending up very weakly. That's slightly better, but you've got these big, strong moves. That's against the Swiss franc, so you can ignore that bit. But it's not trending, is it? It's kind of coughing and spluttering, trying to make movements. If you look at the Aussie New Zealand, the New Zealand is beating the Aussie at the moment. It's not Aussie strength. It's everything else a little bit weaker. Everything's just weak at the moment. The trouble with this market at the minute, which is why we're getting these big propulsion ranges, is there's nothing with any strength anywhere. Nothing has directional bias. So if you get something that for any reason whatsoever gets ever such a slight interest and people start buying it, it moves like crazy because there's no resistance against it. And this is why we're getting all these continuous sideways moves after news, because there's no reason for it to continue. There's no reason for it to stop. So let's wait for the next news event. Oh, that's 1.1 out. Right, let's fly for an ADR. And that's it. That's all you get. So it doesn't, it looks fairly strong, but it's really not. It's had a good run for the last couple of weeks. That's it. But it's just running back up into range highs. Yeah. So that was the previous range. We had a price discovery short, which failed. Came back up into the range. This is a price discovery long. I don't see any reason for this to push. I expect us to be back down in the range again. Yeah, there's no reason the Aussie will be stronger than the US dollar. The US dollar just had, as expected, news come out and a 0.1% miss month on month, not even on core CPI. It's not going to be bullish. It's not going to be bearish. It's just going to be what it was before. So absolutely no reason for the US dollar to weaken dramatically, and there's no reason for the Aussie to scream off to the upside. It's got no advantage. So nice extension. We're looking for a pullback into here. At least test those lows. But it's it's just the problem at the moment is it's just taking so long to do anything. Yeah, this is what I'm doing. I'm getting into trades and I am sitting in them for weeks because the market just doesn't go anywhere, which just ends up costing you money. Right. I have a problem to find the saved export file from the position trader EA. It's in your, so if you're going to open data folder, in your data folder, it will be in tester files. It'll be there. if you're using the strategy tester. If you're not using the strategy tester, it will be in MQL for files. It'll be in there. So if you just go into your Robo Forex folder, if you go into your folder, your terminal folder, so just go to the up the top, go to File, Open Data folder, and then if you just go up there and search Files, it'll find the Files folders. It'll be in your Files folders. That's where they're stored. MT4 only, doesn't work in MT5, obviously. Right, that's all I've got for you today, really. There's nothing much happening on this CPI number, unfortunately. We've had the initial news spike. We're half an hour in, not going anywhere. So it's pretty much at the moment, it looks like it's a bit of a dead duck, but we'll wait and see. I suspect we will just come back down here, but let's have a quick look on Financial Juice and just see if there's any market reaction to it. So that's the data release. Short-term interest rate futures jump after CPI. Traders add bets to Fed rate cuts. This is the thing. Who are the traders and why the hell are they paying attention to a 0.1 differential? Seriously, it hasn't moved. Yeah, that hasn't moved. That hasn't moved. That's gone down 0.1 and it's only measuring the last 30 days activity. Just who are these traders? They don't know what they're on about. Traders slightly add to ECB easing bets. We know that. That's not really any news. UK rate futures price in 2 cuts by end of year, which we were doing anyway. Fed swaps pricing faster pace of 2024 rate cuts after the CPI data. So basically, the market overreacting to that 0.1 differential. If this was really, really, really big news, this would have gone. It hasn't. So look at the wicks. So there's your news. Yeah. We pushed down, buyers stepped in. We pushed down, buyers stepped in. Sellers have stepped in, buyers have stepped in. No one's got a clue. Yeah, buyers, sellers, 50-50, buyers and sellers. We're not going anywhere. There's wicks to the downside, indicating there's more buyers in the market than sellers. You'd expect that after an order like that's just gone into the market. Everyone's going, ooh. But look at the wicks to the upside. I don't think it will go, but we'll see. Were you trading during COVID? Yeah. Well, I wasn't trading during COVID, no. Well, I was trading during COVID. I hedged my positions. And I didn't trade for... Don't know. It was all a bit of a blur, to be honest. 4 weeks, 6 weeks. So yeah, I didn't trade. I traded after the lockdown happened, basically. But I made some losses in COVID. When the drop initially started, I made some losses. Because it all happened. It didn't happen too quick, but we weren't expecting what we got. That's basically, it caught the market off guard. Nowhere near as much as a black swan event, but it was, you had time to react to it. I think I posted something in Telegram about it. I wrote a big long post in Telegram about what I did in COVID. Which I can't find now. you'd think you'd be able to search for the word COVID, but obviously talked about COVID quite a lot. Oh, I'll go back into 2022, look. Finally. Yeah, but I did trade through COVID, yeah. But after, basically, all that happened in COVID was we got an initial drop, dramatic drop, which happened over a period of weeks. So basically what happened was the market went, oh my God, that's a big move. Oh, that's a big move. That was where you went, what the hell is going on? And then there was talk of lockdown. We had Italy go into lockdown, talk of everywhere else going into lockdown. It was like, crap. Okay, get out of stuff, and anything you can't get out of, hedge it, which is basically what I did and what I think most people did. And then wait to see what happens. And then we had the big drop, which took a couple of weeks, and then it all came back up. And that was where I went, okay, looks like we're back to where we were. There's your long-term black swan, if you like. Continue. That took about 4-6 weeks. And then it all kind of got back to normal. Well, it wasn't normal. There was a lot less volume in the market, but it was normal. Price action started again. Don't forget the banks went into lockdown as well. And they needed time to get remote working set up, all that sort of stuff. So there was a period basically where the economy just stopped for 4 to 6 weeks, whereas nothing happened. And everyone was like, we can't do this for the next 6 months. We'll all go bankrupt. So that's when it all started to kick off again. But we will know what to do if there is talk of a pandemic in the future. You will see the market drop faster and harder than it did last time, and you will be stopping everything and taking everything off the table immediately. Just notice use RSI 14 for H4. Yeah. Do you recommend this over RSI 21? I do, yeah. I've never used RSI 21 on the 14, on the 4. RSI 21, you'll find very few signals. So it just takes a stronger push. A lot harder to get a signal. But there's nothing wrong with using the 21 either. You know, this is, I'd say it doesn't matter which one you use. I use the 14 on the 4 hour and the 21 on the hourly. If you want to use the 21 on both, use it. I have still got no clue what price will do after you take that entry. All it's doing is it's telling you the market is extended. I use the 14 because on the 4 hour, I want it to get extended more. I want it to have pushed harder, which means it needs a lot harder push to get an RSI extension on the 14 than it does on the 21. 21's more smooth. This is more jerky, basically. But yeah, it doesn't make a huge difference. There's no right or wrong to trading at all. You could use a CCI, MACD, anything you like. Is any oscillator. The reason I use RSI, obviously, because it measures relative strength. But, you know, that there was the right place to get in. You would have got in there on the 14. You switch it down to a 21. You wouldn't have got in until somewhere about there. But you would miss an awful lot of other activity. You would have got that one, but you would have miss an awful lot of other signals. It's personal preference. It really is personal preference. The best thing to do is look at a chart. The reason that I came up with the 14 on the 4 by looking at the chart. Yeah, if you just go, what I did, there's a video on my website about it. About I think it's on. The RSI dashboard. Yeah. So all I did basically, again, you can see it there. So I drew lines on the chart when RSI was extended and looked roughly for what the strike rate was. Yeah, and it's a very simple process. So draw a line there. That was an RSI above 70. There's another one there which is above 75, but there was a 70 there as well. So just drawing the lines on the chart and seeing what happened after you got that signal, and then switch it down to a 21, switch it down to a 7, switch it up to a 28, and see what the difference is. How many lines have you got on your chart? What happened after those lines? That back test across multiple instruments told me that the 14 was slightly more accurate and got you into more positions. But if you want less drawdown, you use a higher extension number, and you might want to use a different RSI. But there is no right or wrong. What will happen is you'll have entries in different places. Whether those entries work or not is down to the market after that entry. So there's no, there isn't a better one or a worse one. It's just different. This is where everybody gets het up about what's the best. The best is what gives you the strike rate in the future, which you can't see. If I knew what the best RSI was, or I knew what the best moving average bounce to take was, I would use it. But I can't, because I don't know what it's going to be until it's happened. Everything on your chart has happened, and you can look on there and go, well, if it goes above the 90 on the 21, it has a 70% strike rate over the last 6 years. If it goes above the 70 on the 14, it has a strike rate of 85% over the last 6 years. The difference between 70 and 85% when you're position trading is not a lot. If you're using a stop loss, it can make a big difference. But when you're position trading, you're taking additional entries anyway. So you're getting in a slightly earlier or slightly later, or rather you're getting in slightly early, or you're missing opportunities. That's the difference. If you miss an opportunity, another one will come along. There's no point in getting in for the sake of getting in. Get in on a set of rules. If that set of rules isn't the best set of rules to use in the future, it's not the best set of rules to use in the future. If you keep adjusting your set of rules every year because it changes, all you're doing is you're just changing to match last year's information, which is going to be different to this year's information. So you just go with a long period of test and go, that looks pretty good. See what happens when you press the button. There isn't a better one because it's different all the time, unfortunately. One of my mentors used to, every year he published a moving average list, basically, on the daily time frame, I think it was. Pretty sure it was the daily time frame. And what he used to do is every year he would get a guy, and he didn't even do this himself, he got a guy to do an analysis of moving averages for him. So he would say to that guy, I want you to run an analysis on this pair over the last year. And I want you to tell me at the turning points, which was the moving average that it respected the most. So he would draw up a list of like the 270 moving average, it respected it 6 times. The 240 moving average, it respected it 4 times. And he would go, right, this year we're going to use this one. Yeah. And I went along with this because that's what he did every year. And he was like, we're going to readjust ourselves to find out what the best thing right now is. That year has nothing to do with it. Those moving averages didn't work in the future. They did work sometimes, but you run the same analysis, and what happens every single year, he publishes the same report with different moving averages. What does that tell you? They've never been right, because every year he changes them to something else, which means they were wrong every year. They were wrong because they were based on last year. Last year has got nothing to do with this year. And at the best, this moving average here measures the last 24 days, and this one measures the last 72 days. So it's still lagging by 3 months. What he was doing was saying, give me the best thing that lags a year. Why? It's useless. But same with this. If you look at last year, you might find that the 2180 was the best to use, But the year before, the 1490 was the best to use. Which one are you going to use this year? You've got to pick one. Just pick one. It will work or it won't. And if it doesn't work, like this H1M5 mean reversion entry off the 70, which I took there yesterday, I should have waited for the H180 today. But I didn't know that yesterday. So I took it. It was wrong. So I'm going to get in again in about 2 minutes, 40 seconds. I'm about to get in again. This candle. Oh, you git. I'm not going to get in because that candle, do you see the line there? The open has to be above the line. That was just below the line and it was just going to close. So that wouldn't have given me an entry. So I'm taking a manual on it. That's exactly what the position trader EA is for. So now the next entry is up here above that monthly high. So my next entry is if we break up above that high into that propulsion move. Just adjust my targets on that. I'm just going to put my target there. Basically, it's above the weekly high. This black line is previous week's high. So that may well act as a resistance, or rather a previous resistance may well act as a support. Other than that, we're looking at this double top potentially. There's also a daily 2-day high there. Get out there. How did you get that out those hedges? So FTSE hedge exited there and exited on the news. That was the target there. We bounced out of the propulsion gap. And the DAX, I'm still in. I'm about to exit. Still in the DAX. In fact, I might get out the DAX. It looks like we're finding support. Look. I'll give it this candle because this might get me out. I'll take a break even on this if I can get a break even, which is virtually there anyway. So, what was happening during 2016 to 2020 as to why the market strengthened so much? No, just did. What markets? It's a very broad term. Over 4 years, what happened to make the markets go up? I don't know. I don't know. I'm a walking encyclopedia. Yeah, it tends to happen after 15 years doing the same thing over and over again. 1421 RSI, not much difference. No. If you switch MA style, let's say to linear weighted from simple, that would change the entry criteria more so, yeah. With a moving average, definitely. I meant the COVID ones. Oh, the hedges on the COVID. Sorry. How did I get out of them? Just waited for them to come back, basically. So on the drop, that's a long way away, wasn't it? Oh, hang on, where are we? Can't really see it on there. Where's March? There we are. Yeah, Euro US dollar was a real blip. Look, but if you look at some of the other pairs, yeah, I mean that's your COVID spike there, going into lockdown. Yeah, so when we got back to in fact, that was 2 months, wasn't it? It depends which pair you're in as to how far it moved, but it was about 6 weeks or so. So that would be round about there. So that was the drawdown basically on the hedge, which was about 284 ADR, 445 ADR, from there to when I took the hedges off, and then it all came back to origin. Yeah. So basically hedged it as it went wrong and locked in the drawdown. I took a load of loss. I can't remember what exactly the loss was, but I took quite a big loss on it. Bit similar to this quarter, basically, with what's happened with the yen and some of the Aussie pairs. It's like everything just went nuts at once. You just had to go, screw that, shut it. And I scaled out of a load of positions and then re-hedged what was remaining. And then just waited for it to start to come back down again, because it looked like it was coming back down again. That's literally it. But some of the pairs, this was quite a big spike. A lot of the other pairs, I'm just trying to think what I was in. I can't even remember, to be honest. Yeah, there you go, pound. So there you go. So that was the pound move. Yeah. Returned within, I remember it being 4 weeks or so, because I took about a month off, which would bring me back to there. So yeah, it was about a 4 ADR hedge. And then just got out and started working out the hedge. That's it. Same ways you do well, it's not the same ways you do in position trading, because obviously I had two directions on, but when it got back to the hedges, remove the hedges. So the hedges just stay there until the market comes back, and then you remove the hedges and you're in exactly the same position you were before the hedge was put on. So you make no loss on the hedge, basically. It's just there to stop, put the brakes on, wait, get back, right, start where I was again and carry on from there and just work your way out as normal. They were very, very different, as you can see. Yeah, I mean, that took, the initial drop was there. Look, we got a 3-day drop we hadn't experienced before, which was like, what the hell's going on? And then we had a move which undid itself in 23 days. So 1 month of trading, 23 trading days. You were back to where you started. I don't think I was in the US dollar CAD. That one took a hell of a lot longer. Look, mind you, you probably wouldn't have got any hedges on until there. So 50 days. So 2 months, 2.5. Seems a hell of a long time ago now. It was a long time ago. Hopefully, that doesn't happen again. 2016, 2020 were Trump years. Lower corporate taxes, underhand compliment to his policies. Yeah. Yeah, I don't know. The trouble with looking at the past is the past is the past. And it's all different. Every year is different. Yeah. So if you look at the interest rate differentials every year, they're different every year. So this is why the market never repeats itself. This is why everything you do in backtesting is absolutely no use in the future, because everything you're looking at in backtesting is based on an interest rate differential between the Aussie dollar and the pound, for example. That's a really bad example with the Aussie dollar because it's a 4.35 and hard to work out the maths on. But let's go with the CAD and the pound. The interest rate differential right now is 0.25. It'll be pretty rangy. Yeah. Go back 3 years, the interest rate differential was 2.5. Yeah. It's going to be very trendy. Go back 4 years when we had 0.0 and they had 1.5, for example. it's going to be still a bit trendy, but not as trendy as it was before. So you do a back test there and you do a back test there and you do a back test now. There's no way you're going to get the same results with any strategy, regardless of whether it's mean reversion, trend, breakout, or whatever. It's going to give you different results. Yeah. Go and look at the pound New Zealand ATR numbers. I always use this as an example because it's a really good example. I used to trade the pound New Zealand at ADRs of 350 and more, 400s. Can't even find the ATR indicator. You should use ATR 10. Yeah. But going back in the past, I was trading these numbers here. Yeah. So that is ADR of 330. It was trading up at 427, but as an average, you were looking somewhere around about 275, 280 ADR. We're trading at 118. Any strategy you use on 118 ADR is going to perform differently to a 300 ADR or a 250 ADR. If the average daily range is twice as much, the strategy is going to perform different, which is why you need to test all strategies over that sort of time, Test it when you've got a trend going on. Test it when it's really choppy and rangy for months on end. Yeah, if it works there, it works there, it works there, and it works there, it's robust. Yeah, if it doesn't work there and it doesn't work there, you know, you don't get good results in high ADR periods or trends. So it's a rangy one. But how do you know when you're in a range? How do you know when you're not going to be in a range in the future? You can't. So you've got to find something that kind of slightly works across everything all the time and just accept those losses when they come. Because you can't get anything that works all the time. Somebody contacted me with a strategy that wants me to build an EA using moving averages. And basically, when the idea of the strategy is when it breaks above a moving average, you go long. Every time you get a candle in the opposite direction, you add a position, and then it moves up. So the idea is you get in here, and then you'd add a position there because there was a down candle. You'd add another one there. You'd add another one there. You'd add another one there. And you'd add another one there. You'd add another one there. And you see where the problem is. The market spends 80% of its time doing that. That strategy will only work in a trend like this. It would absolutely kill it there, but you would blow your account 80% of the time. Doesn't work because different strategies have advantages in different market regimes. In a trend, you want a trend strategy or a mean reversion strategy. You don't want a range bound strategy. There, you want to be a range trader. For 3 months there, if you'd have bought every low and every high with 2-3 positions, you'd have absolutely cleaned up. Did it there, you'd have absolutely died. Which is why you need something in the middle, which is what position trading is. It's like, okay, we were in a range, now we're breaking out into a trend. We need to get out of this one as fast as we can with as little loss as we possibly can, because we've made 28% on our account here. We're sitting in 16% of drawdown here. Shut it. Let's take that money. Very similar to my yen trade, yeah? I lost a decent amount of money on this yen squeeze. It's one losing trade out of all of the yen money I've made over the last few years. I had one loss where I had to go, screw this, cut it. But this is why I said I'm not going to stop trading the yen, because for 5 years or so, the yen's been absolutely brilliant. I've had no problem making money using the yen. But the outlook has changed. Yeah. So any backtest you do on any yen pair over the last 20 years, they've had negative interest rates. They now haven't got negative interest rates anymore. So the last 2 decades of information you've got on the yen, useless. What's the yen do in positive interest rates? I don't know. We haven't had computerized systems to trade it since they have. How do you do that? What do you do with it now? No idea. No one's got any idea. There's nothing you can use on the yen in the future that's going to work now, because we don't know what interest rate differentials are going to have as an impact on this thing, how much of this death spiral they've got left. There's, you know, Look at the ATR at the moment. Yeah, this is normal. That's abnormal. That's abnormal. Yeah, look what happened after we had the last abnormal one. Is this going to be the inverse of it? It doesn't help. Nothing helps you in trading. The only thing you've got is risk management. That's it, risk. Because what happens to a currency is completely down to random news events and market participants. The only thing you can control is your risk. You can't control whether you're going to go into a high ADR period. You can't control whether it's going to stay low. You can't control whether it's going to range. You can't control whether it's going to trend. How can you pick a strategy to trade? You can't. You just have to get in, wait, and adjust your price. That's all you can do. However, there are ways to get money out of the market with stops and things, and using risk reward, but not with a single entry. You won't find anybody making money with a single entry, because the single entry strategies are based on that. Yeah, and they're fine-tuned and fit to what price did there to make money. Not going to do that again. Multiple entry strategies do not have to be accurate, which is why oscillations with multiple entry strategies work, because they don't have to be accurate. Was that right? No. Was that right? No. Was that right? Yes. Excellent. Well, let's get in there. If you get in there with your single entry strategy and you're wrong 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 and you keep being wrong, oh dear, how are you going to get 15% of your account back? Wait for a 15 to 1 R? Good luck. They only happen in trends, which happen 20 to 30% of the year. No chance. It's just not going to work. They just do not work. But that's the maths of it, isn't it? When you spend long enough looking at maths and statistics, you realize it doesn't matter. Nothing matters. What matters is getting in and getting out. That's it. You have no control. And what's going to happen with the US elections this year? We've had a 2016 to 2020 boom. Yeah, because of Trump. Is he going to get back in? Is he going to go to prison? If he goes to prison, are there going to be riots? Is the civil war going to break out? If so, what's going to happen to the markets? Haven't got a clue. Is Russia really going to invade Ukraine, get Georgia on side, double its army, and then try and take the rest of Europe? No idea. What's that going to do to the markets? No idea. What's it going to do to ATR? Not a clue. No system or strategy you can use to predict what's going to happen in the next 12 months. So just get on with it. Pick one, jump in, wait and see what happens. That's literally it. That is your choice. That is your trading strategy. Get in, wait, get out. YV, have a good day all. You're off. Okay, bye. You've obviously gone now, I would imagine. Well, I've been waffling. Right. That's all for today. Nothing much else to discuss. We are not making any progress. We are coming back down again. Should have got out of the DAX. Markets have opened as well. Dow, straight in, straight out. Easy money. Long NASDAQ, long S&P. Which means if that market is going to drive long, then I need to re-hedge my DAX. That could turn into the first losing day for this month if that DAX hedge doesn't work out. We'll see. But this is I meant to turn this off while I was waffling, because I said earlier, didn't I? Don't really want to trade the US indices this afternoon because there'll be no volume. Yeah, the volume's gone in the news. The market is strangulated now. They haven't got enough volume at the open to really put the orders in because they've all gone. So you tend to get this horrible, rangy, nasty movement. So getting out as fast as you can. I'm just going to get out of the S&P as well. And just take whatever you can if you're in the indices this afternoon, because this market's not really going to have much volume left, I wouldn't imagine, this afternoon. It's just going to sit around and it's in shock mode. So, but that US dollar is unraveling, which will be bullish markets. So Sorry, the US dollar is pumping, which will be bearish US dollar markets. So US stock markets. So we'll see. Yeah, it's coming down nicely now. Right. So tomorrow I will be back 8 o'clock tomorrow morning. We'll have a look through everything tomorrow. It's the Aussie dollar unemployment rates overnight. So bear in mind if you're in Aussie pairs, we've got the unemployment rate coming out tomorrow morning early. We've got GDP as well for the yen. If you're trading it, it probably won't do an awful lot because the GDP's not really got anything to do with what's going on at the moment. But that's your main news tomorrow. We've got unemployment claims tomorrow afternoon. But if that didn't do anything, that ain't going to do anything. So we'll get a spike off of it, but we won't get a lot of movement off of it. And then there's absolutely no news on Friday. So this is your last news event this week, Aussie dollar unemployment. So any movement we've had could well just get undone tomorrow, or it could rally it. So bear in mind that's coming out in the morning. If you've got any Aussie positions that you can take profit on, probably worth taking it. Stick it in the bank. You can always add it back on again, but you can't take it away if it's drawdown. So get out of any Aussies, I would overnight. If there's any profit on the table, I will be. I don't think I'm actually in much Aussie. Yeah, I've just got one short Aussie US at the moment. So yeah, not a lot really that I can take. But it might be anything I can take. But so yeah. Anything you need, let me know. I'll be in Telegram or Discord. Other than that, I will be back tomorrow morning, 8 o'clock. And I think we're going to trade indices on Friday afternoon. So be on at 2:15 Friday afternoon if you're not around tomorrow morning. All right. So have a good one. Anything you need, let me know. Otherwise, I will see you guys next time. Have a good day.